Welcome to David and David on Real Estate. Join us as we explore the ins and outs of the real estate market.
Good morning and welcome to the David and David on Real Estate podcast. And today we are on episode number 76.
Let's go. Love it.
Super excited. We have Bruk Telahun with us. He's a residential mortgage broker, and we're really excited because David and I we talked about the market in the last the previous episode. I think it was episode number 74, where we kind of gave our market outlook. But it's always great to connect with industry professionals that really have a pulse on the market, that understand what's going on out there. And it's all about just adding more value and educating consumers and professionals. So Bruk, really excited to have you on. Welcome.
Thank you so much. David and David. I love it. What a podcast name, eh? That's so remarkable. I really appreciate this opportunity to be invited to come on. I really do. Thank you. And I'm excited to discussing what we've planned to talk about. So,
well, we're really happy to have you with us today because when we don't have a guest on these things, David and I just sort of make it up and we pretend we know what's going on in the market to some extent, and we speculate. But what we have talked about is the key thing that's driving the market right now is the mortgage rates and things that's really going on in with interest rates and that world. There's a number of other factors that we've talked about in the past, coming out of COVID and inflationary, the low supply and other economic issues and the war in Ukraine and all that stuff. And they're all factors. And then these laws that we may like or dislike that the governments at different levels have imposed, trying to slow down the market a little bit. But the main one, I think, that really has an effect on the markets is the interest rates and what's going on in your world, which is dealing with mortgages.
Yeah. People are nervous, especially people that are coming on for renewal. Especially, obviously, people on a variable product. They're very nervous. They're scared, they're pissed off too. Remember, like the government of Canada, not to make it political, but they said they were going to keep it, very low in the twos until 2024, right? So that surprise, and we just got the raise of 0.25%, 25 basis points, 0.25%, and that has a big jump. It's $15 per $100,000 mortgage that you hold, right? So the $100 is a big deal, a big jump. So people are they're tight, and I think we're going to see people in a lot of trouble, unfortunately. Yeah,
I agree. And I had a conversation with my broker of record, Sabia Ali, yesterday, and Sabia said to me, David, you have to be the good news preacher. You can't, and I said to her, I said, Sabia, I think there's so many opportunities out there. And the realtors that work hard and do the proper things, they're going to gain market share, right? And they're going to gain market share because so many realtors are sitting back and having this negative mindset, and they're getting entangled in all this negativity, and that's okay. That's their choice, right? Everybody has a choice, right? You can push forward, or you can let the negative news affect you. And the beautiful thing about that is you're right either way. Whatever choice you make, you can justify it one way or the other. We've seen this with COVID. Some realtors sat back and said, "Oh my God, the sky is falling. We're in a pandemic." One of my realtors had the audacity to say that his wife didn't let him go out there and transact. Realtors would come up with any excuse under the book. Not to do business, not to do the things they should be doing every day to make an impact in their business. And what I think it does, it leaves an opportunity for the rest of us that work really hard, that are hungry, that want to go in there to gain market share. Right? So is it tougher out there? 1,000%.
It's tougher from the consumer side, but from our side is to your point, David, you're making such a good point. If people are just listening to what you're saying, and if they're newer, I understand. But if you plug in to people like you, right, industry leaders, and understand the trends, I mean, there's business now as we speak. Who do you think is servicing those assignments? Who do you think is servicing those sales? Like, you gotta plug in and you gotta grind for it, but you can't sit back, to your point, David. Absolutely.
And
Yeah.
if people are feeling pressure,
Yeah.
right? If people are uncomfortable, if people are squeezed, like you said,
Yeah.
to me, that's more of an opportunity to provide that support system and explain people's options, right?
Right.
The worst we can see in the market, like from our industry perspective, is a lack of transactions, right? Because that's kind of like a stalemate and nothing's moving. David, your office isn't processing transactions, everybody, nothing's happening, right? But as soon as sellers come back to the table and realize, okay, you know what? I'm squeezed, I'm tight, I can't hold on to this property. Let me look at some other options. And they have options on the table, right?
Yeah.
And as long as things are moving and as long as transactions are flowing,
Mhm.
it doesn't really matter where the prices go. Like as long as you buy and sell in the same market, you're in the same financial position.
Right. I think it was also the through the pandemic where we were all busy. David, I'm sure you're busy with your law firm, and Dave with your brokerage. I mean, with
Mhm.
cheap money, right? And that, I guess, for a lot of folks, even for my industry, that set a tone of just greatness. But there's also going to be darkness coming around the corner, which we're experiencing. But you're right, David. Like, if we follow the trend, plug into industry leaders, follow what they're doing, and convert on those opportunities. Become a support system. Right now is becoming a support system, that go-to. And then for me, like, I go back as looking at budgeting now, right? Like, right from just budgeting and see what we can do. Downsizing is something, another option for folks. So absolutely, you have to farm. It's farming season. But if you're sitting back and waiting for it to come to you, no, it's not for you, unfortunately, it's just the times. But yeah, I mean, from a consumer side, I feel for them. I think that they were told one thing, and then there's some accountability as well. Like, what were you doing to prepare for something like that, etc.? What were you doing, borrowing on a variable, buying things for your household and things like that. So from a financial literacy and budgeting standpoint, there's some accountability, but at the same time, I mean, no one can forecast what was happening as far as the policy lending rate and how it's increased over 8 times now, right? So that's the reality of things. Yeah.
Yeah, it's difficult, it's impossible, not even difficult to anybody really have a crystal ball. We're all trying to look at trends and figure out where the market's going and things like that. But we really don't know. And I have a lot of sympathy for a lot of those consumers out there because they were busy trying to find a way to work, through a pandemic and keep their jobs and find a way to still be productive in whatever business they were doing. And a lot of businesses were actually quite busy during that period, busier than they otherwise were. And then they're coming out of it thinking, okay, so this is what my salary is, and this is what my spouse's salary is, and we expect to keep going. And we have a young family, and we want to move up. We want to buy our next property, and they're making their plans, thinking that things are going to just move forward. And then all of a sudden, they're in this, like, it's like the rug's pulled out from under them. They're in this very uncertain period where I'm not sure if I have a job.
Yeah.
Not only that, I expected to get a salary increase this year. That's not happening. I expected to get a bonus, but the last half of 2022 was so bad that I didn't get the bonus that I thought I was going to get. And now I'm not even sure, my job is very secure. And now my mortgage is going to come up for renewal soon. So, and our plan to move, like, there's very little to buy. Like, it really pulled the rug right out from under them, like with the best of intentions. Sometimes I'm not saying,
Yeah.
That they were doing bad planning. I think there's a lot of very innocent, good intention people that just got caught.
Yeah, exactly. And it's us, it's our responsibility as professionals to be there for them. I really truly believe that. So, when you're getting those calls coming in as far as what to do with the variable, you take them, you spend some time and offer some assistance. And you know, you can do as, you know, as a broker, as a mortgage broker, you know, you can do as much as you can, but reach out to other professionals as well, right? You know, financial planners, etc., real estate brokers as well, and try to collaborate to find solutions for folks. That's all you can do, you know.
So Brooke, when you get those calls, like say that, somebody is in a situation where they're in a variable mortgage right now,
Mhm.
what's your advice to them? Like what is, what are some of their options?
Yeah, it's a great question. I actually got a call not too long ago, specifically on the previous, the most recent increase. And I said to my client, how are you comfortable? Like, how's your payment obligation overall? Are you stretched? Like, are you really in a position where it's like you can't even pay for the next grocery bill or something? It's like, no, Bruk, I'm okay. I just want to know, like, what's the best course of actions. I said, if you're really comfortable, I think you should stay the course. I don't always want to say lock in. If you're going to lock in, just know that that 5 year fixed rate is going to be, you know, 9 times more expensive to break than a variable rate, right? So keep in mind in that. So if securities is sound, you know, if you want to sleep well at night and you want to feel good about it, then maybe perhaps lock in on a shorter term. And the three year fixed rate is actually really competitive right now, actually really competitive. And so maybe shorten that 5 year to locking into a 3 year term as opposed to the 5 year term. But if you are comfortable, you have the cash flow, your household income is good, and you're not in any kind of trouble, I think you should stay a course, and write out the term. That's my opinion, but that's dependent on, you know, the whole scope, the whole household cash flow, and how it's being used. You know, for folks that, you know, I've had files where at least I've you know, I get done underwriting it and it's like, okay, let's call the insolvency trustee or let's put it on the market. You're not borrowing any more money to put a band-aid on what what's already been scarred and bleeding. Like it's just nonsense.
Mhm.
So, and that's why I say you need to reach out to professionals outside your circle to get that advice and that collaboration. Sometimes it's worth it, you know. So
And let me ask you this question. What percentage of the customers coming to you are experiencing these sort of problems? Like
lately it's like pretty much feels like everyone.
all the calls you're getting on it.
Yeah.
Because like from a leadership point of view, right? Being a leader in the industry, like the question that I'm asking is what percentage of the population
Mhm.
is in trouble? Like those are the statistics and the trends that I want to know, right? And it's really hard to find that information. And I was watching Remax did a study, and Christopher Alexander was on, I think, City TV last night,
Yeah.
talking about the how much debt different cities have, and his argument was that the debt has gone down. The ratio of debt to property valuation has gone down in different cities. And here I am listening to this and putting my analytics cap on, and just shaking my head because the market hasn't really adjusted in terms of prices. There's still this standoff, there's lack of inventory, there's really, there's been a small adjustment, but really we haven't seen an adjustment really in the marketplace. And I don't know if we will, right? But at current valuation levels, of course the debt ratios are lower because property values have gone up so high.
Right. Great point.
Also,
Great point.
so yes, and the trend is trending lower, but like, I was listening to him talk about how wonderful this is. Our debt ratios are lower across the board in every single city. And I'm like scratching my head and thinking to myself, well, yes, that's a good news, feel good message out there to the marketplace, but is it an accurate statistic and isn't an accurate measure of whether we are in trouble out there or not? Like that's the question I was asking myself. Is that an accurate message to kind of measure if the average Canadian is in trouble and in too much debt by looking at that statistic?
Yeah, that's a great point to make. And I'm not, you know, an expert, an economist or anything like that, or those numbers to me fairly. What I know is what's in front of me is that I'm hearing a lot of complaints. So to your point, it doesn't really jive. Maybe perhaps those statistics are not including, unsecured debt that folks are carrying, because that's the underlying issues that we don't talk about. I mean, car loans amortized at 10 years, at whatever percent, costing them roughly about $1,000 in some vehicles, personal loans, credit cards, things like that, in that nature. That's the underlying issue as well as consumer debt that's unsecured, because that's where it boils over to now coming to a renewal at a higher rate, and you're carrying unsecured debt and cannot afford your overall debt load. So yeah, it's a great question. It's a great point you made too, David, because that's not realistic, because house prices have increased and have continued to increase.
Right. So, I mean, for anybody that has bought real estate, previous to 2017 and not refinanced their home, then, that ratio is very much skewed, right? Because house prices have gone up so significantly that when you look at those mortgages, they're extremely, that ratio is extremely low. Right.
Yes.
But when you look at the new products out there, they're extremely high. So, yeah, maybe it's, but the point is that every property has increased in value, right? So, I kind of sat back and I listened and I kind of analyzed the numbers, and I thought to myself, like, if on the surface you're listening to that message, coming from, an authority like that, feel pretty good about where we stand as a country and where the trend is moving to. And, I think it's good to see debt levels, that ratio go down, right? For sure. But when you kind of dig into that and really think about it, is it the right message to send to the marketplace right now?
That's right.
Right. Because I mean, I don't think people should be taking on more debt. I don't think people should be stretching themselves. I don't think people should, feel good about, higher interest rates. I think we need to start making some really smart decisions and realize that there's a lot of opportunities out there. But I think the average person needs to understand that, they need a professional to guide them through the situation. And that's so important right now, because you don't want to put yourself in a situation where, there's, the debt ratios are lowered and, there's, go out there and spend money and buy real estate. Like you have to navigate a little bit more carefully in today's environment.
100%. Thorough underwriting, making sure your situation, your risk level is assessed. One thing I'm finding is investors themselves are leveraging to invest in an appreciating asset, which is great, but they're not caught. They're caught in certain cases. So, they might borrow, an unsecured line of credit, and the bank potentially calls it, for example. What do you do now? Right? That's a big issue. So then you have to rely on private mortgage, which is insanely expensive right now. I mean, we're looking at 17 to 20%, that's crazy, right? So there's ways you can combat that, obviously. I'm a fan of leveraging, converting bad debt into good debt, to be honest with you. I think, with the amount of taxes that we pay, most Canadians don't understand that, if you borrow from your primary home, becomes tax deductible. If you have borrowed from your primary home to invest, it becomes tax deductible against your personal income. So that's a very, very powerful strategy. And, if it's put together and it's a long-term strategy, then yes, then I think that's a good idea. But like, to your point, you really have to, wait for the bad times as well, or prepare for the bad times as well.
Yeah, I think as professionals, the three of us will probably agree on this. The biggest service that we can provide to our clients, especially in these type of times, turbulent times, is to give them information and give them options. Because an informed consumer, then can make the best choices. And that's what I hear from people all the time. In my business, like, take me through the worst case scenario. If I go this route, what's the worst case scenario? What's the best case scenario if I get out of it? And then what are the options in the middle that I can consider? And, and it might be downsizing for certain people, and that might be so distasteful to other people. It might be just selling and going back to the rental market, which would be a horrible thing for some people, but it might be the right thing for somebody else. And some of it is just helping them understand that interest rates are sort of here to stay, in relatively speaking, in this range. Don't wait. You can't wait for them to go back to 2%. We have to tell them it's not happening. This is where it's going to be. It might be up a little bit. It might come down a little bit, but it's not going back to 2%. So we have to give them as much information as professionals as we can, real information, give them options so they can understand it. And that takes a lot of time for us as professionals to do it. It really does. As an agent, as a mortgage broker, as a lawyer, it's really taxing on our time, because it's those type of conversations that every single client and potential client needs from us right now.
100% education, sharing of information, and it's part of the business now. It's part of the business. I've transitioned from when I started 8 years ago to calling myself as an agent or a broker. Now I'm an advisor, and you have an educator, and someone that's willing to go above and beyond and asking those questions, forecasting what could and what can happen if we make certain decisions, asking and probing questions. It takes time. Yeah, it takes a lot of time, but you know what? It's going to build a book of business that's not going to go anywhere, and you feel good about it too, right? You're helping people indirectly, but there are times where you have to, some clients are wanting to do what they wanted to do, but if you've laid out the consequences, and you still have to service them. But with that mindset, I totally agree with you, David.
Yeah, maybe before we go further, because we didn't really do this at the beginning, but maybe, Bruk, give us a little bit of your background.
Yeah.
And so we hear how you got to this position of wisdom and to advise clients like this.
Well, where I started is that, I wanted to get into law enforcement, and that's something I wanted to do coming up. And, but, I felt like, that career was more of a friction against people. I felt like, so it wasn't completely me. I'd rather build a rapport with general people, and with good vibes, as they say, So I kind of switched and just said, listen, if I had a little bit of a sales background, and so what is something I can do that dealt with people, help people, but also got me ahead as well. So, mortgages just fell on my lap, really, and just decided and went for it. So that's how I started, is just making a decision to shift to working with people and helping people. I worked at a private military school, and that's where I transitioned from, from brokerages, it was a good time there. And I worked with youth at risk and things like that, but I made that transition. And it's been 8 years. I'm loving it. It's challenging, but it's something I wanted to do. And I own my own brokerage, and I'm looking to scale that very soon. But yeah, I'm located in Grimsby, Ontario, but I operate across all over Ontario, from Niagara up to GTA. But yeah, and as far as about me, I'm a father, and I'm a husband, and an entrepreneur. So that's a little bit about my background. Yeah.
Love it. Thanks for sharing.
My pleasure.
Yeah, talking about budgeting, we just ran a webinar yesterday with Zachary Rain at the brokerage about budgeting, and it was very well received. And I think there's an important message there, right? Like, I mean, to your point, David, consumers need to be educated, right? And it feels like right now there's no right choice. Like, it really feels like that. There's just different degrees of.
But there's different choices.
Different choices,
for
right?
different fact situations.
For different factual situations. But it's so important to really take the time as a consumer and really understand, the consequences of all those situations, right? And I mean, the consequences are real. Like, they're very real consequences, right? my commercial mortgage is coming up for renewal in July, and I'm making certain decisions along the way to prepare for that coming in July, right? As a business owner, you have to look ahead and you have to say, okay, my commercial mortgage is coming for renewal in July. What is that going to look like? What is that going to do to my cash flow? How is that going to impact my business? And I'm making certain decisions. I chose to put certain pieces of real estate I have for sale so that when that time comes, I can pay down that mortgage and, be in a better cash flow situation. And I think everybody kind of needs to look ahead and understand, what their situation is and not only look at today, but, try to look at what's going to happen 6 months from now, what's going to happen a year from now, what is my budget going to look like? And how are, even making small adjustments today will make a big impact tomorrow. And the analogy I always give is a laser pointer. You move the laser pointer just a little bit, right? But on the other side, it's moving quite a bit. That's how people have to look at their finances and money. Wealth is created over time, not in a day. And this is the mentality that a lot of people have had in the last couple of years because money was so cheap. It was instant gratification. Property values were going up. We're seeing properties being assigned before the closing date with huge premiums on those assignments. And now things have really changed, and a lot of people that have overexposed themselves are the shore went out, and now we see what everybody's wearing.
Yeah.
Right. And it's unfortunate, but like I said, and I'm going to continue saying, there's such an opportunity to take a bigger market share. There's such an opportunity to create content. There's such an opportunity to be a thought leader out there and to really help people that are in those difficult situations that need help.
Yeah. Yeah. And more specifically is the pre-construction market, because, they were qualified at a 2%, 2.8, somewhere in that range, and now they're coming into closing at a 5.24, big jump. And there are alternative solutions for those. One would be, if you can't carry it, assign it, depending on the assignment fee, like you're saying. But there is options where we can look at on the B side of lending, where they can use current market value. Let's say it's $1 million, and let's say their purchase price was 800,000. We can finance it up to 800,000, literally. So, which would say 100% financing. So most folks don't know about that product, which is a very good product, depending on the overall deal. But that market there is in trouble, big time. And folks are relying on private mortgages right off the gate, which they step back and see if there's other alternatives, which is a little cheaper for them. I think it's worth looking into. So, but yeah, absolutely. I mean, taking a step back, the compound effect, making the decision now and how it will affect you in the near future is very imperative to look at.
Yeah, and when it comes to pre-construction market, in the height of COVID, we actually saw builders going back and having conversations with purchasers and saying, hey, if everybody agrees to pay us $60,000 more, we're going ahead with the project. Otherwise, we're canceling because, construction costs and development charges and labor costs and, every excuse under the book. We haven't really seen too many of the opposite conversations happening. But you're right. I mean, that market is in trouble. And I always look at the ratio between the price per square foot for pre-sale and the price per square foot in the resale market. And right now we're seeing probably about a 30 to 40% spread there. And to me, why would you pay 30% premium just to live in a brand new building? It's untested. There's so many factors going in, living in construction. There's just so much. Like, why would you take that risk? You can go into the resale market. You can get a 30% discount compared to the pre-sale market. You know exactly what you're getting. Yes, you have to, make that purchasing decision today, and you can't wait 3 or 4 years from now, but you also know exactly what environment you're transacting in. You get to see the view from the balcony. You get to touch and feel the space. You get to, go and look at it and envision yourself and see if this is the right choice for you.
Yeah.
Right. My message to, my close circle of realtors that asked me for my opinion over the last 2 years, I told everybody, I said, these prices are not sustainable.
Mm.
But the problem in that market was that for the last 15 years, if you bought pre-construction, you've always been ahead of the game, and by a substantial margin, right?
Right.
And there's diehard people that, have made so much money in pre-construction that some consumers they didn't care what the price per square foot was, because they thought that market was bulletproof. They've made so much money in the last 15 years. Yeah, I'll take one unit. On new building, I'll take one unit, right? And they've always made the right decision, right? But the world's not absolute, and it changes. You have to, be very careful about how you overexpose yourself and what risk you have out there in the marketplace, and I talk to people who have had many properties in the 80s and 90s, and there's a lot of people that have lost everything because interest rates went up. They couldn't afford the housing. And when you look at economics, as realtors, we tend to only look at one variable. We tend to look at price. We have a very narrow scope of economics, right? But the problem is, like, one variable affects hundreds of variables.
Right.
Right. So, like, jobs, like if the economy, if we're in a recession, the economy contracts, right? People are going to get laid off. There's going to be a shortage of opportunities, right? It's going to start impacting our labor markets. That's going to translate into our rental markets. When renters stop paying rent because they're out of jobs, because they're unemployed, because they're laid off, because they're on EI and their income gets cut some, like, there's a trickle down effect, right? And we're not seeing it yet.
Right.
We're seeing small glimpses here and there, but I look at some Fortune 500 companies, they're already laying people off, already forecasting that, the demand is going to diminish for their products, right? Because ultimately, to combat inflation, people have to stop spending.
Yeah.
They have to stop spending. That's the bottom line. If people keep spending, companies are going to protect their margins, right? They're going to keep raising prices.
Yeah.
The only way prices go down and the dollar maintains its integrity and its purchasing power is if prices have to come down on everything, right? But it's a cycle. It takes time, and it doesn't happen overnight. And we're habitual creatures.
Yeah.
Right? We're habitual people. Like, if you're spending money and you're used to a certain lifestyle, it's going to take a while for people to say, okay, you know what? Maybe I shouldn't be purchasing the Starbucks tomorrow morning. Maybe it's time for me to make my own coffee at home. And realizing that those small change in their behavior, again, remember the laser pointer, small adjustments today are going to make a big impact to your finances tomorrow.
Absolutely.
I know. Again, I think it's better that as an industry we're informed, right? I don't want to spread, I don't think the sky is falling. That's not the message here at all. But the message has to be that, we got to do things a little bit differently. We got to work a little bit harder. And if we do, good things are going to happen.
And I think, David, we're actually a networking conference. I think you mentioned about getting that message out as a whole. I think through our media, we should really get that out there on the masses. I really like that idea, by the way. Honestly, it's but who's gonna do that, right? So because we need to do it together. Yeah,
and that's why when I see, like, a big brand going up on national TV, and saying, hey, our debt ratios are down or trending down in every market, and I'm like, oh my God, like, is that really the message we want to be sending right now? Like, as an industry, and that's, we've sent that message for the last 15 years out in the market, purchase real estate and real estate is bulletproof, right? But tell that to somebody who's in a variable rate mortgage, who bought a house 2 years ago, who's over leveraged, who thought it's a good idea to buy investment property, who really didn't know what the hell's going on, who listened to the Bank of Canada 2 years ago, who's now listening to Remax telling this good news story. Sit across the table from him and tell him that it's going to be okay.
No, it's not. It's not at all. It's quite opposite. My fear is like, what I don't know is, and I want to research a little bit more, if we're at this point, like the calm before the storm, because it just feels like we're at the beginning of, everything has to catch up. I feel like it hasn't, because so many different stories, so many responses when you ask, certain people how you feel about this. It's different from one another. One might have a good paying job and good cash flow, and it's not in the position of strength, but you talk to somebody that's not. So I'm wondering if this is just the beginning, beginning for 2023 and into 2024. So
I always look at it in long term. I think we can confidently tell people and get the message out that if you own a home in the GTA, you're going to do okay. Okay. The market's going to come back. Prices eventually going to go up. The values are going to be there. If you're thinking long term, it's getting through the short term. That's the struggle right now. It's weathering that storm. And is the storm coming, or are we already in the middle of it? Sometimes we're in the middle of it, and we might be at the end of it, and we don't even realize that it was there. But we have to weather the storm and try and get people through it and hang on, because once you're through it, eventually it'll settle down, and the value will be in your home, and the value will go up in your home if you're hanging on to it, or in an investment property. The values will come back. The employment will become more stable. People will have jobs. Renters will be looking for places. Prices, the rental income will go up, etc. It will come back. It always does. We just don't know exactly when and how much of a storm we have to weather. And that's where you really need the advice of good professionals on your team to give you the option, give you the information, and help you through it. And everybody's facts are a little bit different.
100%. And you got to be firm with your conversations as well. I mean, in order for consumers, if consumers are looking, if they're all over the place and you're not binding them as a whole and you're not firm, then you're doing a disservice. Never mind what the reaction is, never mind whatever review that they give you. I had a situation where a client was in a consumer proposal and they were going to stop making the payment just because of their situation. And I just went off. I mean, I went out of my professional hat and I said, listen, you're now moving into double bankruptcy, which is a suicide. And so for them to hear that, and for me, it's just I want to make sure that they're making the right choice, but sometimes it's received as, oh, you're telling them what to do and things like that. You can't think that. And so when clients and consumers have these type of professionals, honestly, it's so important, very important, to your point, David.
So there's been changes to stress test levels. There's been a few changes in recent years. Maybe walk us through that a little bit and what you tell people and what they should be looking to do and achieving those levels.
Yeah, so I think what's being tabled right now is that the government is looking at not extending a mortgage more than 4.5 times the income. So they're looking at basically approving, let's say, $150,000 household income, no more than $675,000 as a mortgage to be approved. So that's just in addition to the stress test. The stress test is still in play. That's just an addition. That's what they're looking to do and table. And another thing is also, which is I think is more, it's a good one, is to the line of credit. There are products right now that are re-advancing, line of credits that are re-advanced up to 80% loan to value. And so they're making sure that they only restrict that to 65%. So there are some products. So they're looking at the line of credit product as well. So I think, to me, that the stress test, in my personal opinion, I think was a responsible one, because it held, and it actually did good for the most part. Because if the stress test, when you think about it, the stress test wasn't in play, and we're in the situation that we're in now, we'll be in more trouble than what we're at.
Oh, for sure.
Big time, right? Because
For sure.
we'll be financing over 80% uninsured. And it could, and that restriction, I think, is responsible, I think. But what we can do is maybe looking at the amortization for folks on the immediate term, looking at maybe adjusting the amortization from 25 to 30 to maybe 40 years, right, on the prime side. I don't know for how long, but that would be some sort of relief, maybe 40, 45 years, right? Just as some support, right? But
Let me ask you a question.
yeah.
Do you think that would add to a problem that would perpetuate a problem that we're already seeing in the industry? I agree. I mean, it would definitely offer relief for sure,
Yeah,
but
yeah.
are we just feeding the monster? We do that.
Yeah, I mean, it would have to be, there's no control of how a consumer's behavior is or a client's behavior. We have no control over that. But it would be some sort, it would be helpful as far as from a cash flow perspective. But I think the underlying business, like we always go after mortgages and look at mortgage rates and adjusting our policy when it comes to mortgages. But what about the underlying issue of unsecured debt that we push on people? Credit cards, personal loans, maybe looking at car financing, extending the amortization. I know, I understand that, but it's restricting cash flow. And I think that's what the issue is. So we're limiting cash flow. And so we reborrow and we get into the private side of lending, and you're digging yourself a bigger hole. So there's no control of the consumer behavior, but if we can at least have that option, it's something to look into,
Yeah. I'm going to switch gears a little bit, and I'm going to put my positivity hat on and then take a look at all the positive things that are happening out there. And I mean, I think the labor statistics came out in December. I think we have one of the lowest unemployment rates in the country. We added, a record number of jobs in December as well. Salaries are trending upwards. So, that's obviously really good news, to your point, Bruk, because, people need to be able to sustain and carry these debt levels that they have and then be able to pay their obligations. And, when you look at it from a labor perspective, it looks like we're really in good shape. And that's really the biggest difference between 1989 and today is that, we have a very strong labor market. And the other thing is our immigration policy. We're letting in 500,000 people every year. And again, because of our points system on our immigration policy, we're letting in business owners, dentists, accountants, doctors. And these are people that are coming into our country with money. Right? So they're contributing to our economy, they're contributing to our real estate. And that's a big contrast between what was happening in 89 and what's happening in today. Our immigration policy and our immigration numbers weren't anywhere close to what they are today in 1989, right? And I think on the world scale, Canada continues to be a place where people want to move, where people want their kids to grow up, where we have, safety, security, clean air, clean water, and that's not going to change. And, Dave, we talk about this all the time on like, I feel like almost every podcast, but I mean, it's important. It's important to talk about these things because, Canada is one of the best countries in the world, right? And it's going to continue to be on a global scale. So, when you look at, the situation from that point of view, David, and Burke, I completely agree with you, David, that, if you can hold real estate in the long term, you're going to be just fine. History has proven that time and again, right? But it's just getting through the short term where you need the proper guidance, and you need to make adjustments to your behavior and to how, you do your budgeting, how you do your spending, right? And for all the realtors out there, all the entrepreneurs or business owners, right? You need to ensure that you're spending money on marketing and on business growth.
Mhm.
Very important, shift from, all the expenses that are not necessary. And you have to do things that will increase your market share and grow your business.
Yeah, it's a time for preparation right now. Time for preparation, because I know that on the end of it, the market's going to be back. Everything, it's going to be much better than what we're experiencing, and that's a trend. We know that to be. But if you're sitting back and not spending on personal growth, like you were saying, and like for me, I've invested a lot on content and information sharing, David, like you were saying, education. I'm getting a lot of feedback, positive feedback, a lot of engagement. So this is the time to really reevaluate your approach and go for it. Do what you can to make it happen, for sure.
Yeah, I just want to go back to something you said a while ago, Bruk, you were talking about variable rates.
Yeah.
And just to go back to that a little bit, because like to David's point, about adjusting spending habits, if you're on a variable rate mortgage right now, it's costing you a lot more money than it did a while ago. And the money's got to come from somewhere. Something has to give. And I think, David, that's sort of your point. So you got to be budgeting properly, because all of a sudden your mortgage is costing you a lot more money. It's the same property. You're still living in the same place, but you're spending a lot more money on your mortgage than you were 6 months ago. And that's going to continue for a while. So you have to look at, well, if we have to spend that money, what are we not going to be able to spend on right now in order to afford it? Right? Because you don't want to get in trouble on your mortgage. So you got to find somewhere else in your budget to cut back or do something differently, especially if you're not going to get your raise or the raise you thought you might get this year. You're not getting the bonus you thought you might get. Those factors are not going to help you out and bail you out. Be happy you've got your job and you just have some cash flow coming in, but something has to give, right? So you got, like with David, you got to look at your other spending habits, your other budgets. Something has to give it. We've gone through that professionally too. We have, like David, we have a commercial mortgage that was on a variable rate, and it didn't even come up for renewal. There was something in our mortgage that I never even paid attention to because I never thought it would come into play, where up until a certain point, there was a threshold where the rates would go. And if you're only below that point, you keep paying the same amount every month. And just as the rates change, some more goes towards interest, some more goes towards principal, and that gets adjusted. But there was a threshold in there that we were never even paid attention to, really, because we never thought we'd exceed it during the term of this mortgage. All of a sudden, we're above that threshold, and the bank calls and says, "Hey, you know what? We got to adjust your mortgage." We're not even sure how to do it. The bank actually said that we don't even sure how to do it because we haven't never done it before. But we have to raise your payment amount.
Yeah, the trigger rate. Yeah,
we're above the trigger. They didn't even know how to do it. This is like one of the big 5 banks. They weren't sure how to do it. So they're all scrambling to see what to do when we get to that trigger rate, right? So all of a sudden now we're paying a lot more per month on our commercial mortgage than we thought we would, because we thought, okay, variable rate, we're paying X dollars per month, and we'll see what happens at the end of the term, how much went towards interest, how much went towards principal. No, our cash flow changed significantly all of a sudden. So if you're a consumer in your home dealing with that, it's a harder thing to do. Like in our business, you say, okay, we got to pay more money every month. Where's our mortgage? Can we cut back expenses somewhere else? Business expenses, right? There's more opportunities. When you're it's your home that you're living in, it's a tougher.
It is. It's a decision. It's a sacrifice. I can go as far as getting a second income stream. Really, like you have to do what you have to do. You can't just let, if you like your lifestyle, great. And I appreciate that you want your family to have a certain type of lifestyle. That's great. But and you're not willing to look at that, you have to get out there and increase your overall cash flow, whether it's to get a second job or find a new way of earning more, legally.
Thanks for clarifying that. But David, I completely agree. And I think the people who do really well and weather this storm are the ones who, are going to be very upfront and very willing to kind of sit down and talk about these short-term pains, and these conversations are not easy, but I'm having them with the staff on a regular basis. And I'm saying, hey, look, we have to treat things a little bit differently. We have to adjust how we, order supplies. We have to adjust how we account for breaks and for vacation. We have to adjust how we do certain things that we didn't pay attention to before, because now everything is starting to matter a little bit more. Right. Yeah. And it's having those conversations every day with everybody that, again, is going to change the needle quite a bit. Right. And, the one thing I'm very proud of is, Sutton Summit has been around for 37 years. Mm-hmm. We weathered a lot of storms, and it has a lot to do with our commission splits here at the brokerage. We're on a 50-50 split, and then we cap, mm-hmm. and then the agents are on 100%. And that split, has really hurt. Well, I wouldn't say hurt, but it limits the income that the brokerage makes. So, in these record high years when realtors are earning, really a lot of money, I'm ecstatic. I'm all about growth, right? But our income is capped on the brokerage side, right? So, I mean, we continue to earn, the same amount of money, but
unless you have more agents, that's the way to increase.
Unless you have more agents.
Right.
But the reverse is also true in this market, right? Which is why, when it came time to really, making a purchasing decision and really getting involved in this brokerage, it made me feel more comfortable because, if we can weather the storms because of our commission splits, mm-hmm. That ensures continuity. It protects our consumers that deal with us as well, because they can rest assured that their trust money is well protected, that, we can operate very well in every single kind of environment, and that we can weather these storms a lot more significantly than other businesses are. But I can tell you guys that I'm getting 2 to 3 phone calls from other brokerages every day, because they're in trouble mm-hmm. from a cash flow perspective, right? Like businesses are hurting out there, and mm-hmm. It's going to be time to make some really, really tough decisions for a lot of business owners out there, and they're not fun conversations to have. But I think as an industry and as thought leaders, we need to be able to have these conversations and help people around us get through this situation.
So would you say a lot of agents, newer agents, will have an issue? Will have a problem of staying in the business, or even people that are in the business for a long time? Because my shop for me is just me and my wife right now operating it. I'm looking to scale, but just as an advice from you, is that what's going to happen, or?
Well, NAR came out with some interesting statistics, and NAR is the National Association of Realtors. They're the equivalent of the Canadian Real Estate Association, the CREA in Canada. They're much larger. They have a much larger sample base as well in the States. And an article came up about a month ago, and they're projecting 30% of the newer realtors will not survive the next 12 months in the industry. Right. But for me, when I look at statistics like that, that lights a fire within me, because, that points to me that unless you work hard and unless you do the right things, and unless you, go out there and every day take steps to build your business, you're not going to survive.
Yeah.
And if that doesn't light a fire underneath you, then maybe you don't deserve to be in this industry.
Right.
Because like, I mean, there's no easy way of saying it. You know, you got to go out there and you got to work your ass off.
Got to grind.
Yeah,
You
like,
got to grind.
if that turns out to be true, okay, and it might be true, maybe it's not 30%, maybe it's 28%, maybe it's 32%, but it's going to be some number. So the whole thing is, which side of that number do you want to be on?
Yeah.
You want to be part of that 30% or you want to be part of the 70%? So figure out what you got to do to be on the right side of that number.
Yeah. Door knock, cold calling, which I still do, to be honest. And those are the painful activities for a lot of people, but
Yeah, but we got to change your mindset.
that's just it, though.
Change your mindset. Like get that word out of your system. You know, screw that. They're not painful. They're fun. They're exciting. I get to talk to people. Like, change your energy level. You know, like cold calling. The fact that you can even dial and get somebody on the other line and have a conversation should excite you. You know. Talk to people, right? Get out there, talk to people, network, do the fun activities that will result in more income in your pocket, right? But it has to come from you, right? Like it has to come from within. You know, if you call it like a negative activity or, you know, like that, you're already setting yourself up for failure.
100%. And so, and then that's why I say it's so important to listen to your mentors and asking for mentors, and it's so important to collaborate and do things together, especially this time in our business, David. How is it in your world, David? In the legal world?
It's tough right now.
Yeah.
It really is. And we've talked about this in the podcast before, because our business is very cyclical. When we're talking about residential real estate, we do a lot of commercial work too, and there's no season for that. There's no season for doing wills or incorporating companies, things like that. But on residential real estate, there's definitely a season. So we're just entering February now, but January, February, historically, even in the best markets, are slower for us. We're closing less transactions every year. And as many years I sit around with my partners over the years, we say, okay, we're paying up. We got all our staff is here. Everybody's working full time, but we don't, in January and February, in the best markets, we can't keep everybody busy. Okay. So now we're in a much slower period of time than we would normally be in. So I'm always the optimist, like David is too.
Yeah.
Thinking, okay, it's February now. It's going to pick up a little bit. We're going to get to March. The weather's going to improve. It's always a spring market. Things will get better. So, and I'm hopeful that it will. I'm sure it will. It's a question of how much better it's going to be. I know for a fact we're going to close more deals in April and May than we do in January and February this year. Right. I just don't know how much of a rebound it's going to be. So we're in the same weathering the storm business that I've been talking about. Okay, we have really good people working with us, and we want to keep everybody, and we want everybody to be available when we get through the storm and get back to being busy, because we need those good people to help us in our business. It's not just about me and my partner and the other lawyers. It's our law clerk. We've got some fabulous law clerks in our office. We got great people doing our admin and our banking and our office manager. Like, we really work hard to build everybody at top level, to provide top level service. We don't want to let anybody go. We don't want anybody to feel the need to leave. So how do we weather the storm? That we're going through the exact same process. How do we get through? Let's get through January, February, March, and let's find a way.
Right.
Okay?
Right.
We want to be ready when the market improves.
Gotcha. That's a very, it's just that, it doesn't matter what industry, right? It doesn't matter what industry it is. Like we are all saying the same thing, which is so interesting to me, which is awesome, actually. Yeah. It's encouraging to hear, because it's just not one-sided at this point in time,
Like, everybody's experiencing the same pain points, but David, I know for a fact that you guys are probably pivoting from like residential closing to wills in the States and second mortgages and and different products that you're offering to offset and to, you know, build up that revenue and to keep your staff happy. Like, you know, you know, we have such a strong relationship between our two offices. I know that, you know, you guys have amazing staff. And as a business owner, it's so much harder to, you know, just let your staff go than to keep them and keep them busy. And, you know, they've already trained them. They already know all your systems. They already have the work ethic that you want them to. You don't want to let go of anybody. I get that. As a business owner, you know, we're going through the same things with the brokerage. You know, we have a great staff. We're a small group. We all work really hard to keep the realtors happy. And, you know, I'm doing everything I can as a business owner to drive that revenue and make sure that, you know, their jobs are secure. Right. And you're doing the same thing. And Bruk, you're doing the same thing. Like every business owner is struggling, but the common theme is pivoting, you know, and having those conversations and thriving together, because it takes a team to build something great.
100%, 100%. Collaboration too. I've kind of noticed as well.
That's a big theme in 2023. And, you know, on my other business, you know, that we're very short on time. I don't really want to go too much into this topic, but that would be a great podcast, because I think collaboration is probably the strongest business trend that we're going to be moving forward. You know, we have to help each other build each other up. And there's no better way to do that than by you know, establishing close relationships and pushing each other's businesses forwards in a big way, right? So, David, maybe that's going to be a great, you know, topic for a future podcast.
No, it is, and we've talked about it before, and we all act for the same common client. You know, you're the mortgage broker, you're the agent, I'm the lawyer. We act for the same consumer, right? We really have to look at it like we're a team, not trying to, you know, outdo each other or be their number one person and throw anybody under the bus if something goes wrong. Like, we have to be there to support each other. We have to understand each other's roles, because the more we can collaborate, work together for the same common goal, the better off we all are, right? So it's important to have that, build those relationships, have that trust amongst us in our respective fields. And it just doesn't make sense not to me. Like, to me, it's the natural way that we should be doing things. And I think that's the way the consumer benefits the most, because between the three of us, we've got to give that consumer all the best information we can give, and give them the options and the choices. They make an educated decision. And that's how they admire us as advisors to them and refer their friends and family. And that's how you build your book of business.
Yeah, exactly. You nailed it. 100%. Customer
Awesome, guys. Well, I can't believe the hour flew by as quickly as it did. It always does.
Yeah.
Bruk, thank you so much for joining us. If any of our audience has any mortgage related questions, if you're feeling uneasy, if you need to have a private conversation, if anything that we said at all at the podcast resonates with you, reach out to Bruk, reach out to David Korman, reach out to myself. Love to hear about your challenges and your successes. And the three of us are here if anybody has any questions.
Fantastic. I just want to say thank you. Thank you for the opportunity to come on and speak with you guys. I've learned so much from you guys, and hopefully I've provided value for you and your audience. I'd like to extend the invitation as well. I've started a podcast myself. It's called BDP Podcast. It's launched today. You can find it on YouTube, Spotify, and Apple. But I would love to have you guys come on, and because we can learn so much from your experiences as well. So thank you. I appreciate it. And we'll talk to you soon.
Okay, that's awesome.
Thanks so much.
Thank you.
Talk soon.
Bye.
Bye-bye.